If you've been struggling or been confused in your trading, you don't know what you're doing, I'm going to break down my very simple 4-step trading plan. It's called the Pulse model in less than 60 seconds right here with today's example. Let's do it. So step 1 of the Pulse model is looking for a bias, and we look for a bias using 2 concepts: order flow and candlestick logic. If you don't know what that is, just comment OF down below and I'll send you a DM to a whole video guide I made on that. But order flow is simply the fair value gaps. Where the fair value gaps pointing, and we look at that on a higher time frame basis, starting from the highest time frame. So starting from the monthly, weekly, daily, 4-hour. We're always doing a top-down analysis, not bottom-up analysis. So over here on the monthly, we are seeing bullish order flow. We have bullish fair value gaps pointing higher, and we have a respect of a discount array. A discount array is simply this fair value gap. It is a support level, and we are currently respecting it. Where can we now go towards to that external range liquidity, just that swing high? So we have that bullish bias established on the monthly, but we could also refine that draw on liquidity to where can we actually draw towards to this week, right? Because we have this monthly external range liquidity high all the way up there, but we also have this swing high right here that is more close proximity to where price action actually is. So if we want to draw liquidity for this week, for today even, as this daily candle right here is printing today, where can this next daily candle draw towards to? Because all we're doing every single day is trying to predict the direction of the next daily candle. Well, this next daily candle, the only level, the only premium array, the only target that it could really go for up here is this swing high. So this right here was my drawn liquidity for today. I have a bullish bias aiming for this. Now I can't seem to zoom out my camera anymore, so we're just gonna have to work like this. But the next step, step 2, is narrative. Narrative simply means if we're going higher, where are we going higher from? That's the PD array we're going to actually look for entries inside of. So coming into the New York session right here, I'm looking for the answer to the narrative on these 3 time frames: on the 4-hour, the 1-hour, and the 15-minute time frame. I refer to those time frames as my compass time frames. I want to see those pointing in the same direction as my bias. So over here on the 1-hour, we have 1-hour for value gaps pointing north. Now dropping down to the 5-minute, which again is just the properly aligned time frame off of a 1-hour, I'm looking for my entry function, which for me is an impulse shift. It's simply a fair value gap displacing away from that 1-hour. So if we take a look right here, you'll notice that we have a very nice 5-minute fair value gap inside of the New York session, right? So step 3 is the entry, step 4 is time, which step 3 and 4 coincide because that entry needs to be inside of the right kill zone. The kill zone I use for the Pulse model is 8:30 a.m. to 12 p.m. And this beautiful entry right here has occurred inside of that kill zone off of our narrative array, which is the 1-hour, out of our higher time frame bullish bias, which we established on the monthly and daily charts. So over here, I enter in the 5-minute gap, stop loss at the swing low that creates a 5-minute gap, and then just target a static 2R, and that's the trade. If you found this insightful, follow for more daily breakdowns like these.